it's Julie Muhn. I'm Senior Research Analyst with Finovate. We are here at FinovateEurope 2026. Today I'm joined by Mei Lim, Managing Partner at Anthemis. Mei, thank you so much for joining us today.
Morning, Julie. Really lovely to be here.
Yeah. So we're going to be talking about the rumored AI bubble, as well as advice to fintech seeking funds, which I feel like is a constant issue in fintech.
It's never ending.
Yes,
never
always
ending.
a hot topic for sure. So to start off, you back companies across a wide range of fintech subsectors at Anthemis. And right now, tell us about what new ideas, technologies, and business models you're seeing that really excite you.
Yeah, well, we're really interested in three main areas at the moment. One is in AI high assurance. What we mean by that is a lot of regulated financial institutions are very keen to adopt AI. However, they need to make sure that what they're adopting is high assurance, which is the outputs from the model are accurate. They can trust how the model has arrived at the output, so there has to be a clear audit trail behind it, and it has to make sure that it's been deployed responsibly. And this is super important because the regulator is really focused on making sure that everything that the financial institution is deploying is compliant. And so we're really interested in finding companies who can fulfill those kinds of use cases. And alongside that, we've also set up a really exciting platform called Common AI, which provides essential toolkits for companies to help provide those kinds of solutions. Julie, one of the areas that we're also really focused on is investing in the digital economy. What we mean by that is investing a lot in digital infrastructure that transforms how finance works. And to bring that thesis to life, one of our most recent investments is an investment that we made in a company called Tessa from our female-founded fund. And it's an investment in a portfolio company that provides the stablecoin payments rail for incumbents like banks, payment providers, other fintechs to be able to provide the payment rails to be able to process stablecoins, which is super topical at the moment and an area that we're really excited to lean in on. And I touched on our female-founded fund. One of the other strands that we're really well known for and really excited about is finding diverse founders, people from different backgrounds, as well as female founders as well. We think it's a really important space for us to support, but also that's actually where we find alpha. There are a lot of undiscovered gems in that space.
Yeah, very cool. So as you alluded to, AI is obviously a magnet for capital at the moment, but we're increasingly hearing concerns about this AI bubble in technology and in fintech specifically. As an investor, how do you separate that durable value creation from short-term excitement with companies that are building new ideas in AI?
Super great question, and honestly it takes us quite a lot of time to be able to sort out what is a feature versus what's a durable offering, as it were. And so you really have to unpick what the model is to make sure that it's really providing real value. We tend to look across a few different pillars. So is it providing real benefit to the revenue side? So can it help a customer underwrite better? Or secondly, can it provide real efficiencies on the cost side? Like for example, reducing customer onboarding time. Or thirdly, does it enhance productivity for the front office staff? So there's a lot of work that's required to really underpin that, and that's why when we look at the companies that we're due diligencing, we spend a lot of time trying to unpack that business model.
Yeah, very important and probably increasingly difficult as everything continues to evolve and advance forward.
Exactly, and where we find the right companies, we do then want to introduce them to the Common AI platform, because even as a new startup, it's really difficult to really scale up quickly. And so having something like a platform that can help augment your capability by providing all essential toolkits you might need as an AI startup, that's really, really important.
So we're in 2026 now.
Yes.
Fintech is currently experiencing, a little bit of a slower period for venture capital overall. What advice would you give to fintech founders at any stage who are trying to attract investment in today's environment?
Yeah, super topical question. I know fundraising is hard and it's been really, really tricky in the last 24 months. So I would say to founders, don't be discouraged. I would really focus at the bare minimum of your path to profitability. Really focus on customer adoption. How are you going to prove out customer traction? That's really important for investors to see that what you're offering and what you're selling, someone's going to pay for that. And actually, customer adoption is a really important proof point to show scalability. And whilst you're fundraising, try to make a bit of revenue, and proof of concepts are also really, really important as well.
Yeah, very good. So from your perspective, what do founders often get wrong? We talked about kind of what they should do and what they can get right. What do they commonly get wrong when they're seeking investment?
So I would say that they really need to do their homework when they're preparing for a pitch with an investor. What I mean by that is that knowing exactly what the investor's mandate is and tailoring their pitch accordingly. So it's such an obvious thing because I think founders just really focus on their product, but actually it's really important, just like focusing their product onto their customer, it's focusing their product on the investor. So is the investor an early stage investor or a growth stage investor? So making sure they pitch that accordingly. Is the investor focused on a particular sector? Making sure that their pitch is tailored accordingly that way. Is the investor focused on a particular region? UK, Europe, or is the investor focused on a particular type of capital provision? So we're seeing a lot of providers of venture debt at the moment as well. So making sure that they tailor their pitch appropriately is really important to make it work for both sides.
Yeah, that's such a good point. I heard someone last night saying that the spray and pray methodology does not work, and a lot of fintechs just try to get as many out there as possible, and it's like, no, you really have to tailor it to a very specific one. So.
And it's about making it efficient on both sides, right? No one wants to waste each other's time. So being really thoughtful about it, and if it's not right for that investor, I would always say to the founder, always ask, who else do you think you could refer me to? Never be shy, there's no downside in asking that.
Yeah, that's a good point, is asking that. All right, great. So kind of looking ahead now as we wrap up our conversation, what do you think will distinguish the fintechs that successfully raise and scale over the next few years from those that struggle?
That's a really great question. I think sort of piecing together, the answers from those earlier questions you had, really focusing on product market fit, finding the right customer, really showing traction is really important. Finding the right investor for you. So what I mean by that is an investor who's providing not just capital, but sometimes a strategic investor that can help you scale up more quickly, whether that's introducing the founder to potential customers who can adopt their products, taking them to new geographies. That can help really accelerate their growth. Being associated with an investor who has a portfolio success capability, who can provide other provisions that can help scale those companies up more quickly, whether that's talent augmentation, whether that's providing them the right essential toolkits. We were talking about common AI on the AI side, but also actually really importantly, finding the right investor who provides them the right kind of capital. And that's often underlooked because I think a lot of companies, as they scale up, just think that, I just need to find more and more growth capital. But they sometimes forget that actually sometimes what they need is a different kind of capital, whether it's venture debt or traditional loan or an innovative innovation grant. Those sorts of things which are cash capital, but non-dilutive, that has a more specific targeted use case. Finding the right complementary capital so that you're not diluting yourself unnecessarily. Those are the right sorts of things that can help scale up a company more efficiently.
Yeah, I like that. So not all working capital is the same, and
not
they need
all
to
working
study
capital
and do their homework on which suits them best.
Yeah, but it's a tough journey for a founder, knowing which bits to really focus on. aside from the day job of creating your product. So I would always say surround yourself with a great team as well. Don't try to do everything yourself. Try to find the right team to delegate appropriately.
Yeah, great advice, Mei. Thank you.
Okay.
This is such a wonderful conversation.
Lovely, and it was lovely meeting you.
Yeah, great meeting you as well. And thank you for joining us. And thank you for tuning in.
Thank you.